And of course, there is the long-term chart going back to 1977. Don't we all wish that we all bought property back here if we were alive? You can see every market, it's never a straight line. There's ups and downs, but it feels like we're trending over into the right direction. Now, the Bank of Canada did have that first interest rate decrease, so 0.25% decrease from the Bank of Canada rate. That will impact your variable mortgage payments or anyone with a line of credit. Make sure you watch our video. I teamed up there with Jacqueline Zerbe of Total Mortgage from the North Shore, and we talked about how this impacts you and some things to think about. The Bank of Canada, they were at 5%, and they'd like to get 2.25 to 3.25% is kind of the range they'd like to get to. And with a slow and steady decrease over time, there are a few factors there where we have to keep an eye out. Obviously, things like US inflation and what the US Fed is doing with their interest rates, because we need to keep our interest rates somewhat aligned so we don't experience inflation from having a weak Canadian dollar in purchasing US goods. However, there is a chance that we might actually see this steady decrease of 0.25% over the next couple of years, which is really their plan, because we're starting to see signs of the economy crack. And actually, here's one for you. Vancity just announced that they're going to be laying off 200 of their workers, which is very unfortunate news. It is kind of what the Bank of Canada is trying to work towards in a way in helping reduce inflation. Hopefully, we've got to that target range that they're looking for. Hopefully, we can hold it there and not have things get much worse. And then examples like this and hearing of different people getting layoffs, etc., are the signs that the economy is starting to crack a little bit. So while I have been a little bit pessimistic and didn't think that we would be decelerating interest rates very quickly, I would love to be wrong, by the way. I heard a very good presentation on this. Between the economy and signs like this showing up and the federal government actually trying to reduce immigration by 1 million people for the next year could actually speed up this process. So to be determined. Always figure out, know your limits, stay within it when you're thinking about mortgage financing, etc. But it really feels like if not now or very quickly, we are going into this rate reducing cycle, which is positive news for all of us. And you can see that here, I followed the 5-year CMB, which is the Canadian mortgage bond, which has influence on fixed term interest rates. And you can see back here, this was back in November, February. It's a 3-month chart. We were sitting at 3.75%. It bottomed there in January at about 3.25, and then it ripped back up. And now we're sitting back at about 3.3%. So if this continues, we're going to see lenders giving out better rates on those 5-year fixed terms, which then obviously influences some of those other 3-year terms, et cetera, what a lot of people are thinking about right now, unless they decide to run the variable, which you might need to do some math there. So if you have a renewal coming up or you're thinking of making a purchase, please get in touch with your mortgage broker or mortgage professional at least 6 months in advance, because you could start securing rates today. Things could bump up. We get another piece of information, US housing data or inflation is up, and all of a sudden the CMB goes up and your fixed rate goes up. You might as well lock it in when it's low. You don't use it, no big deal, but then you can take advantage as the market and time passes. The Bank of Canada is very cognizant of the fact that we have these mortgage renewals that are coming. We're here in 2024, there's even more coming in 2025, and perhaps part of their policy is to try to reduce the interest rates closer to the level that people were stress tested at, so they could, while it might be painful, muddle through the next few years until interest rates come down to a level that is more reasonable and manageable. Obviously not emergency rates in the 1 or 2% level, probably more conservative to be budgeting around that 4% range. That's my own personal prediction, maybe 3.5, 4.5, somewhere in there. That would be nice. While more expensive than we're used to, I think it would be a much more reasonable place to be, but you need to kind of put your plan together. I hope you found that helpful. And of course, if you haven't checked out my YouTube channel, make sure you like and subscribe there. If you're seeing this on Instagram, make sure you sign up for my newsletter, go to my YouTube channel, make sure you're getting all the information that we share throughout the month. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. I appreciate your time and look forward to seeing you next month.